Hello guys, how are you all? So I welcome you to Skillset Academy session 3, in which we will start learning the currency pairs and pip. We will learn what are currency pairs, what are major currency pairs, minor currency pairs, what is pip, what are pips, how to calculate them, and what are their importance, how they play a major role in calculating our profit as well as our loss, how pips can help us to trade and see whether our trade is in positive or negative, and all the currencies which are minor, cross, major, what are their uses, how to understand what are major pairs, what are minor pairs. So all these things we will start learning in this session. So I'll see you guys on our slides. So now we will understand the currency pairs and pips. So, welcome to our Forex Trading Basics Currency Pairs and Pips presentation, right? So, today we will be learning the basics. So, first of all, we will be starting with major currency pairs versus cross currency pairs. What is the difference, right? So, first, let's begin by the definition of currency pairs. In Forex trading, currencies are traded in pairs. A currency pair consists of two currencies, the base currency and the quote currency. The base currency is the first currency and the quote currency is the second currency. So this is a very simple way you can keep in mind what is the base and what is the quote. So suppose Euro USD. So Euro is the base and USD is the quote currency. So that's always whatever the first currency is, whether it is INR, whether it is USD or whatever it is, it will always be the base currency and the another one will be the quote currency. Right now, what are the currency pairs, major currency pairs and the cross currency pairs? What is the difference? So now let's explore major currency pairs. See, major currency pairs are the most frequently traded in the forex market. They include currencies such as Euro USD, GBP USD and USD JPY. These are the three biggest major currency pairs which are traded by worldwide traders, by big institutions, by big banks and people like you and me. These pairs involve the US dollar as either the base or quote currency. So whatever currency is having the USD in it, it doesn't matter whether it's a quote, whether it's a base. That means whether it is in first part or it is the another part, it will be the major currency pair. As soon as one currency pair holds the USD currency, it will become major currency pair. After that, what is cross currency pair? Let's discuss some pairs. Cross currency pair, also known as minor pairs, as a small pairs or an exotic pairs that do not include the US dollar. So the currency which is not having USD dollar, we can call them cross currency pair, minor pair, exotic pair, small pairs and other names. Some examples of cross currency are like Euro GBP, AUD JPY, GBP JPY. So these currencies are called cross currency pairs, small pairs, minor pairs. After that, we will see what is the definition of pips. In this financial market, we have to understand the pips. So, pips stand for the percentage in point or price interest point. It is the smallest unit of the price movement in the forex market. Pips are used to measure profit, loss and spread. These 3 points will be very main in upcoming sessions. There will be a different session where we will be learning the profit, loss and pips, right? So some people might be thinking we want to know more major currency pairs, more minor currency pairs. So everything will be there on our channel, in our academy. When from here you will be start growing. This is only the basics. After, see, in basics you don't have to learn all the currency pairs, all the minor pairs. You don't have to learn all these things. When after completing your basics, so if you have completed the basic course or if you already know the basics and looking to start and jump directly in trading and start multiplying your money from day one, So just have a look at our game-changing services, which include of gold with the accuracy rate of 98 to 99% with the cover of 1000 to 2000 pips per week in gold, plus everyday trading setups for all your major currencies, plus cryptocurrency by the leading financial coaches and traders, plus everyday insights of financial market, which includes economic calendar, plus which news will impact what currencies and how they will react, plus the most advanced simplify education which will actually change your thinking regarding financial market and trading, plus the most unique service which is introduced for the first time in the world by us, which we call as Money Talks, where you will get access to different mind concepts related to financial market and motivational financial strategies which will help you throughout your life. And all these game changing services you will be getting just in a peanut price for $99 a month, plus we have a free group which you can join and learn absolutely free basic education, plus every day you can see our results and achievements. When you will be in advanced session, then you will be having your all the material which will be having your list of all the currency pairs, what currency pairs are good for what time frames, everything will be there. So now we'll start with how to calculate the pips. To calculate pips, we need to consider a decimal place of the currency pair in exchange rate. So most currency pairs are quoted to 4 decimal places, which are having USD dollar or any major pair is having, that are always quoted in the 4 decimal places. For example, if we take the Euro USD example exchange, the rate is 1.2345 and it moves to 1.2346. So there is only 1 pip movement from 1.2345 to 1.2346. There is only a 1 pip movement. Another example of calculation of pips, we'll take some examples how to calculate the number of pips, so it will be easy for you as well, it will be very easy to understand. So let's take a closer look at calculation of pips. To calculate the value of pip, we need to consider the lot size and the exchange rate. These two things are very important when we are calculating the number of pips. The formula to calculate the pip value is 1 pip divided by exchange rate into lot size. Don't much stress about this at particular period, because when you start learning how to use the MetaTrader, how to take profits and everything, you will start understanding the pips also. This is only the basic, that what are pips, how to calculate the pips. For example, let's say you have a standard lot size of 100,000 units. Now, what is standard lot size? So there are 3 lot sizes: micro, mini and standard. Micro lot is 0.01, mini 0.1 and standard 1.0. There will be different session for this complete lot size. What is lot size, how to use lot size, which lot size should we use in a particular amount of account. If we have a $500 account or a $100 account, how much lot size we should use. So everything will be there in different session. For example, if we have a Euro USD and the exchange rate is 1.2345, the pip value would be 0.001 divided by 1.2345 into 100,000, which is equal to $8.10 per pip. So if you are opening 1.0 lot, which is known as the standard size lot, then your per pip movement will be $8.10. Imagine if it comes to 1.2345 to 1.2346, then you will be having $8.10 profit per pip, right? What are the factors affecting the pip value? There are several factors which can actually influence the pip value. One of them is the lot size, another is the greater pip value, and some currency pairs have very volatility rate which can impact pip value. The currency pairs which are very volatile, and I hope you have already learned the meaning of volatile. Volatile means where there are a huge number of buyers and a huge number of selling, and buyers are buying at a very high pressure as sellers are selling at a very high pressure at a particular time frame or at a particular session, whatever it is. So it is very high volatile market, high volatile currency in the market. So the currency pairs which are highly volatile tend to have larger pip values. Mostly these pairs are the major currency pairs like Australian USD, Euro USD, JPY USD, USD JPY. Whatever currency is having the USD or it is a major pair, it will be having a larger pip value because they are highly volatile in the market. So what are the conclusions and further learning which we will be taking in another sessions? In another session, we will talk about the lot sizes and how these lot sizes affect in our MetaTrader 4. And MetaTrader 4 will be the first step, the first beginning to enter in the financial market, to enter in the forex market, right? So don't stress much, just be present in all the sessions. Whatever doubts you have, whenever you have some doubt, we always have our customer support. You can contact us through Telegram anytime. You can send us a WhatsApp message, or you can send us a text message, or you can put an inquiry form through our website or on our Telegram. We are always there to guide you, to support you, absolutely free. So always feel free to contact us, and I will be seeing you in the session 4, which will be the explanation of the lot size and how to start using MetaTrader 4. So I'll see you in session 4, guys. Take care. Have a good day, everyone.